Hi, everybody. I'm Kim Seals. I'm one of the general partners of the JumpFund, and thrilled to be with you here today for today's discussion on some of the challenges that female founders face. As you may know, that between 2007 and 2019, even before the pandemic, women were starting businesses at 5 times the national average, and women-owned businesses generated 1.6 trillion in revenue every year. Since March of 2020, when the world shut down, women have started more businesses than men during that time as well. But regardless of these positive outcomes, we know that women are struggling to survive in the business environment, given some of the challenges that they face. Three specific examples: inadequate support systems. And by that, we mean the relevant connections and sponsors and mentors they need to be successful. Access to funding, whether that's loans or venture capital or grants, any type of things that they need to accelerate the growth of their company. And then lastly, that ability to own their own accomplishments and really celebrate their successes. Today, we're going to tackle these topics with an expert panel of fellow venture capitalists to give us some practical advice for how to overcome these challenges. So I'm really thrilled to be joined today by Jackie DiMonte, a partner at Chicago Ventures, Falon Donohue, a partner at Narya, Sylvia Kim, a general partner at CerraCap Cares, and Arian Simone, a co-founder and general partner at the Fearless Fund. So these are our panelists that will be joining us today, and you should see them all on your screen here. With that, we'll get kicked off with our first topic, which is around support systems. And basically, what we wanted to do today was talk a bit about the social capital. And by that, we mean the people you know, the groups or organizations you're a part of that are an essential resource for female entrepreneurs. In a recent survey done by Inc. magazine, 48% of female entrepreneurs said that the lack of sponsors, mentors, and advisors in their life, if you will, was really restraining their professional growth. So I want to start with Sylvia first and ask her to chime in and say, what advice would you give to the female founders on today's call about how to build out their support systems?
Thank you so much, Kim, and it's such a pleasure to be here. Thank you for having me. So in terms of advice, I would say that really building kind of your own ecosystem is, I would say, one of the most critical pieces for anyone, whether you're a woman founder or a woman investor. And in that kind of line of reasoning, I have 3 practical tips. One is, do your research, know what's out there. There's been a lot of different accelerators and groups that have been advocating on behalf of female founders. So I would really get to know what's already out there. There's obviously All Raise. I know that a lot of my fellow VCs here on the panel also support women founders. So I would just kind of get to know what the landscape is. Secondly, I would say, make connections, look at kind of your alumni networks, your existing coworkers or colleagues or people that you've worked with in the past, and don't be scared to kind of ask for introductions, even if your current network is not necessarily going to lead to the kind of ecosystem you want to build. It can get you there. And lastly, I would say really be proactive. A lot of times people start looking to build their ecosystem when they're doing a capital raise. Oftentimes that's actually not the ideal time to build relationships, especially genuine long-term relationships. So I would say kind of get plugged in, be proactive, make those kind of cold calls. I know that when I pivoted into venture capital, one of the first things I did was join the Global Women in VC and start making kind of cold calls, getting to know other people's journeys into VC. So I would really be proactive. And lastly, kind of my personal journey as a fundraiser, a lot of people have said, there's 2 different kinds. There's the hunter, which stereotypically is more associated with male fundraisers. You target, you shoot, and you kill the game. And then there's farmers, who are kind of more of the gentle kind of sowers and plant growers, and kind of doing things, I think, in a bit more of a long-term perspective. And I've often been told that I'm a farmer when it comes to fundraising, and I think that that's actually a really great analogy when it comes to kind of building your support system. Farm and plant those seeds early, because they can go into fruition and turn into wonderful connections for you in the future.
Thanks, Sylvia. Falon, what would you add to that?
That was a great and very thorough answer. I don't have a lot to add to that. I'll just also add that giving back is a great way to build out your support system. Volunteering in events, participating in events, and just, getting together, try to do a coffee every day with a member of your community, and whether your goal is to build out your local community or the female founder global network or whatever your goals are, give first and you'll get a lot back.
Thanks, Falon. I want to turn to Arian right now. And Arian, I know as a general partner of the Fearless Fund, you run a lot of events and do a lot of things relative to founders and their ability to network. So I wanted to see if you might provide some examples of any entrepreneurs you've worked with or coached that have built out their networks, and maybe give us some insights into how they did it.
Thank you again for having me, Kim. One thing I can say is that actually we've provided them with a network. The Fearless platform was around prior to us becoming a venture capital fund. So we have a large Facebook group. We have a large built-in community for women of color founders that already exist. And as you stated, we do have a lot of event activations. But right now, currently in our educational program for Get Venture Ready, we have over 1,000 women of color entrepreneurs just this year that are being educated. So they all have community in the Facebook group. They all have community from our events and from online and offline. So it's not like we necessarily encourage them to go build a community, but more so take advantage of the community we currently have. And I echo Sylvia with that. Like, there's so many communities out there. I don't know if that would be my message to tell them to go start one, because that's another job on top of the job of being an entrepreneur. And the reality is you just want to go get the support. So you know that you're just not out here by yourself, that you're not alone. And I would say tap into the existing networks and communities that are already there, that you just feel, connected to. And our girls love it. They chime in every week. I won this pitch competition. I won that pitch competition. Like, they cheer each other on.
That's awesome. Sylvia, I think you also had an example of a company, right, that you've worked with that built out founder that built out their network. Can you tell us a bit more about how they did that?
Absolutely. Actually, two of the female founders that we're currently working with, I feel like they really took advantage, like Arian was just mentioning, of kind of existing platforms and local community members. Our first investment is from Atlanta, so we love Donohue and Aquagenuity and kind of just the network that she was able to build locally in Atlanta. Another example is a woman that's kind of leading a South African startup. And what she really did, which I think is really practical as well sometimes, is having an advisory council, people who can just kind of make those introductions for you. And again, just we got connected through one of the people that were advising and mentoring her. And I think that it's okay sometimes to have kind of these advisory councils made up of people that you trust that will make those kind of warm introductions for you.
Terrific. That's such great advice from everybody. Falon, I want to dig in a little bit further into this topic about where female founders can access sponsors, mentors, and advisors. I do want to take a minute to distinguish the difference between a sponsor and a mentor, right? Because sometimes we know that female founders can be over mentored and under sponsored, right? And by that, what we're looking for, we want a sponsor. We want somebody advocating for us when we're not in the room, right? They're speaking up for us. They're sharing their insights on why we're awesome founders, and just really helping us progress as a sponsor, someone sponsoring us to that next level. Falon, what would you add to the great comments we've already had around where women can find these sponsors and mentors if they're not already part of a network?
Yeah, I think that's an interesting point that you make. And I've always thought that mentors was kind of an odd concept. I think what you're really looking for is a ride or die partner. And that person can be younger than you. They can be your same age. But to your point, Kim, who is out there advocating for you when you're not in the room? Who actually cares enough to go to bat for you, to make those introductions for you, to give you the feedback that maybe you don't want to hear, but you need to hear? And that just takes time. That takes time. It takes a lot of coffees. It takes a lot of getting to know people. But just back to my earlier comments, it also takes a lot of giving on your part too. So who have you been there for? Who are you able to offer that advice for and be that amazing friend to? I think a lot of this just comes down to finding people we like to be around and being a really good friend.
Terrific. Thank you. Let's switch to the topic that is near and dear to a lot of our hearts, which is access to funding, right? I think we all know that angel and venture capital networks are heavily male dominated. with few women in decision-making roles. Although many of us on this call are working to change that and raise funds and be out there as check writers. And an interesting dynamic is that no matter which crowdfunding platform they choose, female founders perform equal to or better than their male counterparts when they're raising money online. But offline, it's a really different story. And only 10% of startups raising a Series A have a female founder. Today's venture capital environment clocks some 305 active funds with over $100 million in play. These funds have collectively put $114 billion to work, yet 90% of it never sees a female founder. So we want to take some time in this section of the conversation to really focus on what we can help, what advice can we provide to our female founders on how to do some things differently. And Arian, I know I've heard you speak on this topic a lot, so I want to come to you with this first question. Beyond taking in capital from outside investors, what are other ways that female founders can access the capital they need to start or scale their business?
Yes, I do love to speak about access to capital. There's pitch competitions, there's grants, there's debt-based financing. When it comes to capital and the capital stack, there are a plethora of options, and everybody's not necessarily a venture backable company. And there's nothing wrong with that at all. What venture is very aggressive. We're looking at companies that grow and scale at a rapid rate. Our life cycles of our fund cycles are 10 years. So we're looking to see, do you have a 5 to 7 window before you exit? But that's okay. You can be the healthy $5 million annual recurring revenue mom and pop shop. And there's nothing wrong with that. You may not have dreams of being a unicorn or $1 billion company. There's nothing wrong with that. You may say, this is my company, this is what we do, and I'm just stuck in an area of cash flow management. And it's okay, because that's natural. It's one of the biggest pain points in being in business. And you may just need to get a bank loan. You may just need to get a grant. You may need to just go to a pitch competition. Somehow you can also still get non-dilutive capital, and it's okay. There's nothing wrong with that at all.
Thank you. Yeah, and grants, I think, are such an underused vehicle for female founders, especially. And I know that there's some really great resources out there for how to access grants, and we'll talk about that maybe more in our Q&A. And next I want to talk about this topic of, let's say you do get the meeting with the venture capitalist and you're getting ready to pitch. One of the things that we know is that female founders get asked different types of questions than male founders do. Jackie, can you share some initial thoughts around what women can do to prepare for that as they're going into a pitch?
Yeah. And Kim, I want to talk about the different kinds of questions that people get asked too, because I know this has been studied. HBS has a good study on this. I know DocSend does a lot of studies on, how people evaluate pitch decks based on the demographics of the founders. And what they found is that women typically get asked preventative questions, while men get asked promotional questions. So essentially, VCs tend to ask men, what's going to happen if things go right? And tend to ask women, how are you going to mitigate all of the things that could go wrong in the business? And so that just sets up your pitch for a very different conversation, where it's not, sort of growth oriented. It's more, how do you catch all of the things that are falling, which are a lot in early stage businesses. The other thing I think that plays into this, and it might be causation, it might just be the difference, in society, but there's sort of this confidence gap going into fundraising, where men tend to use storylines, women are using a lot of metrics to show that they're kind of grounded in a strong foundation. And so I think a lot of those things are what Kim, you allude to, and it's important to know. And so the way that I have coached the founders that I've worked with is to get outside your comfort zone, and not in a standpoint of like fake it till you make it or exaggerate. But when you're telling your story, tell the best case scenario of your story. You don't need to go into a pitch deck and say, I went through my probability weighted outcomes, and, if we raise half as much as we think we're going to raise, and, we have higher churn than we think, but it's still like, this is totally doable. no one wants to hear that story. They want that model to be in the, kind of data room, but you need to sell, like, if I close my round as I expect and everything goes well, here's where the company is going to land, right? And that's not a lie. That's not faking it. You should genuinely, believe those numbers and have data to back them up. But it should be, if things go well, what's going to happen? Because you can guarantee that all the other founders are saying that, and maybe a little bit more. I think, the other things, if you've raised capital in the past or you have angels that are invested, ask them why they invested. I feel like that's a very good exercise in pulling yourself outside of the weeds, because a lot of times it's hard to get out of the numbers and the details of the business and think about, like, big picture, why did you invest, and see if you can kind of bring that into the highlights of your pitch, the big picture of, like, we're going to build this giant network that takes over the world. Your backers will kind of tease that out before even you do, or maybe you feel comfortable doing so. And then the other thing I would say is, practice and practice with a angle of confidence. So I've seen this across male and female founders, like very thoughtful founders who get a lot of questions, they get asked a lot of things in diligence. And so their pitch ends up being oriented towards, how do I address those questions before they come up? And even when you're practicing, everyone's throwing the hardball questions at you to make sure that you know how to, engage, or you have the right answers. And that puts you in a very, like, defensive position when you go into pitch. And so, maybe towards the end of your practice, like, get some advocates in the room and say, am I telling this story? Like, are you excited? Are there places where, I'm losing engagement, or you think that I'm, underselling or undervaluing what we have, and kind of use that as, like, the last push before you go into your full fundraise.
Great. Thanks, Jackie. So Sylvia, what advice can you give our attendees today on how to answer the question they wish they had been asked, right? As opposed to one of those preventative questions.
I mean, I thought Jackie's advice was so practical, and I absolutely agree about the confidence level. And, I feel like a lot of times there's this imposter syndrome. It obviously happens to both women and men, but it seems to happen sometimes more often to women. I mean, I only say that because I felt it myself as a woman VC. And so sometimes you just have to kind of get over it and just kind of have that skin, understand that maybe the system wasn't built for founders that look like us. But that's why we've got to go in with that extra ounce of confidence and grit, because we're paving the way for the founders that are coming after us. And so I think that, understanding that, the system is the way it is right now. Systemic change takes a long time to change, and kind of understanding that sometimes it may very well feel like a boys' club, and oftentimes it was structured that way. But that's why I think kind of understanding that, having that thick skin perspective, but going in with that extra ounce of confidence and grit, knowing that for every way you conquer that imposter syndrome, you're making it easier for the next founder after you. Hopefully, to me, that's kind of made a difference in terms of my ability to conquer my own imposter syndrome.
That's great. I want to tell a quick story. I was meeting with a female founder who had raised a lot of capital, and I was talking to her about how she did it and, how she overcame some of these barriers. And she told me that when she first started doing it, she would go in and try to act like a guy, right? And then she thought that was her way to do it. So she'd seen some guys sort of swagger in and say, yeah, this company can be $100 million, right? And it could be $100 million in the next 5 years. And she was kind of getting blown off, and they were like, yeah, whatever. And she realized it wasn't working for her. So she got some advice so that the next time she pitched, and they said, well, how big do you think this company could get? How big could you grow it? She said, $97.5 million. And that was just as much of a swag as 100 million, but because she put that decimal point on it, then they were like, oh, okay, well, let's talk about the numbers behind that, right? Because they assume there must be some really meaningful, meaty spreadsheets behind it, to Jackie's point about what's in the data room. And, she just really had to find that thing that worked for her, rather than try to be like other, try to be like the guys, right? And go in and swagger through it, but find a way to be a little more authentic with just as much of a ballpark estimate as the male entrepreneurs have. So I thought that was interesting advice she was giving people. So then from here, one thing that we also know as women are pitching to a lot of male investors, right? We wish there were more female investors like us on this phone, but we know it's predominantly male. And we know that many times female founders are solving problems that they know personally as women, or they're bringing a different perspective to male-dominated industries. A lot of times we find that's what female founders are doing. So Jackie, back to you for a moment. How can these female founders connect with these mostly male VCs so they can see these innovative solutions as profitable opportunities presented by women?
Yeah, I think there are two angles to this question. One is how you decide who to pitch, and then the other is how you actually tell the story. And on the former part, I mean, it's important to remember that everyone has the lane that they drive in. If you have a women's wellness application, like I'm not going to be the one to sort of push that company forward within my team. That's going to be someone who is very focused on the healthcare space. And there was an example of that happening actually recently. It was a women's sexual wellness app, and I was looking at it with my partner, and he was the one who was advocating for it because he had such a stable grounding in sort of the issues and how how insurance companies work, all of these different things. And so it's really important to not just figure out like there's this big thing about warm intros or like how you get access to firms and whatnot. I think it is so much more important to figure out who has the background that is going to be able to assess the company that I'm building and seek that person out, whether it's cold or warm or whatever. It's just so much more important. And then then the like, hey, am I your customer sort of goes down, and you think about it more in terms of a business. And you kind of have to realize that like I assess companies that are so far outside of my personal realm of experience. Like I've invested in manufacturing companies, and I've never worked in a manufacturing plant. And you kind of have to understand, like, figure out the people who have tangent experience, and those are the people, whether it's consumer or health or any other aspect that has to do with the business that you're building. For companies that are specifically targeting women, I think there are a few ways to tell the story that can resonate with with men, or kind of like be a way to connect where they might not be as familiar with what you're building, your problem solution or whatever. I think part of it is drawing a picture that the market is big and the pain is very acute. Because sometimes that doesn't resonate. There are so many things that we go through as women that are very big deals that are just so far outside of what a man thinks of. And so being super articulate about, this is how big the market is. This is why it is so incredibly painful. If you can quantify it in terms of hours or dollars or whatever, like that should be so much further on the forefront, like a lot of that education before you get to even what your product is. And then the other part of it is like defining your customer very specifically, because otherwise you get caught in this cycle of like, we've all heard this, like, oh, I'll go ask my wife, or I'll ask my daughter, or I'll ask, and sometimes those people are just not the people that you are targeting. I think if you haven't, it's a great podcast. I'm sure there are other places where this is, but the Rent the Runway founder, I think it's Katrina Lake, is that right? I don't know if anyone, she talked about how she was pitching the idea of Rent the Runway, and a bunch of these VCs went home to ask their wives, and they were like, oh, I'll just buy the $800 dress. And then they all come back and they're like, there's no market for this. And she's like, well, you make $1 billion a year. So like, of course, this isn't going to resonate. And so being super specific so that, when people go to do market diligence, and they might not get it right away, but they think it's interesting enough to like really dig in. When they dig in and do that market diligence, they're meeting the right people, and that becomes really important in painting the picture.
Perfect. Thanks, Jackie. Sylvia, what would you add to that?
I wouldn't add too much. I would just say that, number one, kind of what Jackie alluded to is really making sure that you're prepared. I can't tell you how many times I get emails from founders in my inbox that are just so far off from our investment thesis that is on our website clearly. that, just because, in my spare time voluntarily, of course, we support diverse and women founders, but that's not explicitly part of our investment thesis. And so I think that, kind of doing your research again, making sure that you're prepared as a founder is so critical. And then kind of going back to what we talked about, support systems, I think this is where ecosystem building is such a long-term game, because when you build out that ecosystem and that social support system, you're not just doing it with fellow women investors, of course, you're also doing it with the industry as a whole. And that's where you kind of need to find those those relationships, those genuine points of connections with people at firms and funds that can be your champion when you're about to do a raise. So I think that it's kind of going back to that being proactive with your ecosystem. And I think that way, when you're doing a pitch, it's not cold, there's at least someone, that has kind of your champion or has given you the honest feedback to kind of make sure that your pitch is not just going to a cold audience.
Perfect. Thanks, Sylvia. Arian, would love to have you weigh in here on this topic around how women can find those VCs and investors that are open to hearing their pitches and hearing their ideas.
It sums it up basically to what they said, but I'll just make it, I guess you would say, just very elementary and basic. You have to sell to people who are already buying. If they are already doing that, this is what's going to cut down all your time. I see Jackie's head, Sylvia's head, Allison's head. That's what makes it so easy. Even raising as a VC, because we have to go out to market and raise capital. I have to personally look at everybody who's investing in Black-led fund managers, diverse fund managers who are looking to get capital out to women of color founders. When I learned to only speak to the people who were already selling or already buying what I'm selling, it cut down a lot of time. So I may have had 300 no's in the beginning, and some no's are not always no. It's no because that's not what we do. Not because we don't like you, not because of any other reason. It's just not what we do. But once you get your top 50 list of this is what this needs to be, that's what I suggest for any entrepreneur who is raising. You need to identify all the thesis of these top 50s, and you say, these are the people who are buying what I'm selling. And that's it.
That's terrific. Thank you. Yeah, it's a great way to sum that up.
Pam, I just need to back up, and I completely agree. It's the one thing that I'm constantly telling clients is, it's a hustle raising money, but don't waste your time on the VCs that aren't in your space. So you have to do your research. Curious to all of you, what tools do you think are the best ones for these entrepreneurs to narrow down their search of which investors do fit their space?
Arian, go ahead.
Oh, I can literally, I don't want to talk too much, but I can talk on these subjects all day. But all you have to do, honestly, once you get the first 5, I know I'm saying like get a top 50, but once you get a top 5 and you speak to them, they will tell you who the others are too, because we co-invest alongside them. So you just need to start with 5. And you can start with your 5, whether it's through Google, whether it's through PitchBook, whether it's through Crunchbase. You can just start with your 5, and then those 5 will know another 5, and those 5 will know another 5. And that's your best way to get a gist, because you're also going into it with somebody who referred somebody too.
I think that's terrific advice, right? Because it is such a network. We all know each other. We all know how to reach out to each other, and we know who's who in our networks. The other piece I'll add to what Arian said is the other side of the equation. Go find companies in your space that have already been funded and figure out who funded them, right? Because that's also how you're going to get to Arian's top 5, which I think is great advice, to start with a manageable number and then grow it from there. You'll look at the folks in your space and where did they get their money. And even if they're, sort of competitors, they're generally willing to talk. I find the female founder community to be so collaborative, and so we're in this together, that, I'm sure they'd be willing to talk about, where did you go? Where were you looking for capital? And where should I not waste my time, right? So don't be afraid to reach out to fellow founders and see who funded them. Anybody else want to weigh in on Ashley's question? Falon, Jackie, Sylvia?
I found Twitter too to be a good venue for people who are open and engaging, and open to sort of cold outreach. So if you don't have email addresses are very easy to find, by the way. They're usually just the first name and then the website domain, but it is very important to meet people where they're at. And you can usually see the people who are either putting out a lot of content that is like meant to reach you. And I see this a lot for, demographics that are not the white male. A lot of people are putting out content specifically to reach you. And so if you can find those people where they're at and then engage on those platforms, I've found that to be an easy way to start conversations if you are starting from zero.
Sure. Well, I want to switch to a topic that is near and dear to my heart. It's not, not that they all aren't important, but this one I think is so hugely important, which is how female founders can get better at owning their own accomplishments, right? We've all seen examples of badass women out there that have done amazing things and they're unintentionally downplaying their own work. They say we instead of I, even though they're the ones that delivered that success. They're the ones that did it. Or they give away too much without a financial commitment from a potential client because they don't want to appear too pushy, right? So I'd like us to turn our attention to some practical advice for folks. And Jackie, coming over to you, what suggestions do you have how to get our audience here today, female founders who might be struggling with this, to get more comfortable taking credit for their own success?
Yeah, it's a great question, because I think it's something probably we all struggle with and will all continue to struggle with. It's funny, Kim, when I was thinking about this question, I was going back to the what is the persona? Like, what would a man do? And I actually think there's like two different personas that everyone sort of plays as a CEO or entrepreneur. There's the company builder, and then there's the, seller, fundraiser, external person. And I think actually those two personas are very, very different. And, in your, kind of question prompt, it said like, some people use we when we should use I. And I actually think that is so encouraging as a company leader, especially when you see the opposite things happen and people just say, I, you're like, you have a team, right? But then when you reorient towards that, external facing role, it is very helpful to be assertive and take credit in all of those things. And I think that's when you sort of reorient yourself and say, I have this company that I have to take care of. I have employees that I have to take care of. And so I have to advocate for those things. I think studies have shown that women are much better at advocating for third parties than they are for themselves. And so kind of creating a little bit of distance between, yourself and the thing that you are creating and protecting and advocating for can actually be a pretty useful tool to be like, no, I'm not underselling myself, because, that will impact this whole entity that, that we are building together. And I think, sometimes that mind shift can be helpful.
Sure. Falon, want to just switch gears slightly and talk about building a personal brand, right? And this question about, how can founders work on building their own personal brand? Because I love what Jackie's saying about there's a moment where you're a leader and you're about your team and you're in the we, but then there's that moment where you're building your personal brand that you need to be out there raising money and being the face of that company. So what advice do you have for our folks on the call today about building their personal brand?
Yeah, I think it's probably less important what you do and more important that you do it authentically. Sorry, he's panting behind me. There are so many great mediums out there. Twitter is a great one. If you're a great conversationalist, maybe you start a podcast. If you're an excellent writer, maybe you start a blog to kind of get your name out there. But I think it's most important to think about, what are you good at? How do you want to be perceived? Is it loyal and available? Are you following through on your commitments? Those things your reputation is way beyond your Twitter followers or your LinkedIn followers or how many people are listening to your podcast. It's how you treat people in the community. So, just always being aware of that. But, it's a great time to get your name out there. I also think, for some folks, they would prefer to build more privately. Maybe they don't want a big social media presence. but they're really great at marketing, or they're a great financial professional that can, volunteer for board service or volunteer for events and lend your talents to some of the ecosystem building organizations in your community. I think there's a lot of really great ways to get out there and meet people, but the most important thing is just do things that you want to do with people that you like being around, and be authentic.
Yeah, thanks, Falon. Arian, over to you to see what you would add to this conversation about personal brand building.
It's not something that I would say that I've been shy of. But I had to do it out of necessity. We are the first women of color fund that's built by us for us. And I had to do it out of necessity, not because it was desire, but because I knew that the mission was just so large. And my why is so big. The reason why I get up and persevere and so resilient through the obstacles is because I know that I'm serving a greater community. And I knew that my personal brand was going to have influence and does have influence on our community. So for me, it was just a little bit different. No, I haven't been shy of it. Like, trust me, if I could have the anonymity and do this, I'd be very happy. But I haven't been shy of it because I knew it was necessary for us in order to raise the capital that we needed to raise in this space. Like right now, Bank of America is one of our investors, and they're emailing and they're like, can you please? And I'm like, I'm on the homepage of your website. You need me to do something else? But I know that they're like, hey, we need this story out there, Arian. If you're going to be a champion of this, we need you to promote this story. So I've done it more so, like I said, out of necessity versus, I had a desire to build a personal brand. So I guess that's a little bit different. But for somebody who does want to build their personal brand, just make sure your why is your reason, though.
Yeah, and Arian, just to ask you a follow-up here, because I know one of the things, you already had a personal brand and an influencer brand before you started this fund. What did you do to extend your brand, if you will, to give that credibility that you needed as an investor?
To extend my brand?
Yeah, so for people to see you differently.
Oh, I have a PR and marketing background. So I would like to say I'm queen of reinventing myself. So I do have that as a skill. I knew that I needed to speak to more business outlets. I knew that I needed to speak in more finance spaces. I have an MBA. So who I am at my core is a businesswoman, and I had to just more so operate in that lane. So I had to make sure that, okay, we're going to reach out to the Wall Street Journal, we'll reach out to Forbes and build these relationships in the media. So we're going to speak to these people. So I did make that shift. And once I made that shift, people were very receptive, because the reality is there's very few African-American women who even do what we do, so they were looking to see change. They were looking to see more faces. And I've been able to meet a lot of people because of that. They're like, oh, we were looking for a woman of color who could come speak right now on this. So I've been able to have those opportunities. But yeah, pretty much forging those relationships with those people speaking on those subject matters is what helped expand the profile in that way.
And what I heard loud and clear of what you just said was you didn't wait for people to come to you. You reached out to the Wall Street Journal. You reached out to the places where you wanted your voice to be heard.
Yes, and thank God now we don't have to do that. So once you do reach out, they start reaching out to you. They've been people who reached out all week. So that's why I said if I could I did it more so out of necessity. I'm like, okay, if we're going to raise this capital, I've got to get in front of people, and I've got to figure out how to work smarter and not harder. I know if we made some noise, people would start coming to us.
Yeah, terrific. Well, I know we're going to shortly open this up to the audience for Q&A, but I want to start by asking each of our panelists to end this part of the segment with what final piece of advice would you give to all the attendees as they're building and scaling their business? And Falon, I'm going to head over to you first and ask, just regardless of all the other questions we've asked, like what's one thing you would give as a piece of advice to the people on today's call?
Just to take care of yourself. Take a vacation when you need it, take a break when you need it, get plenty of sleep. Just make sure that you're putting that first, because, no company has ever been successful with the founder that's so burnt out that they can't function. So just make sure you're putting your health first.
Great. All right, Sylvia, over to you. What would you add for advice?
I was going to say, I love all the things Falon's been saying about being authentic. And so I think that kind of summarizes with the final advice I would give is, I'm an advocate by nature. And I always say it's empowered people that empower others. So if you're not feeling empowered, if you're not driven by your why that, Arian has also talked about, then, you're not doing good for anyone around you, including your business. And so, that's kind of the saying that I go by: whatever the work we're doing, may it empower us internally, but also empower those around us.
Jackie?
Yeah, these are all great. I'm going to go back to the community element. We all work in such an ambiguous world, and there are so many different reasons any one thing could happen, and it can be hard to suss out, what's related to, the environment that we're operating in, how your story, your messaging brand resonates, how you are operating, how your company's doing, whether that's like there's just so much ambiguity out there. And so to have people in your corner who can help you suss out, I can't remember who said, to give you the feedback that's, genuine and real and can kind of be that advocate, but always be in your corner. It's great to have those people. And if you can develop that, sort of informal board of advisors, I've found that to be really helpful when when so much is going on.
Yeah, terrific, great advice. Arian?
To the female founders out there, I would like to say that you are in the people business. I don't care what your product is, what your service is, you're in the people business. So make sure that you always take care of your relationships, because that's going to be your ultimate currency.
Perfect. All right. Well, in the time we have left, we want to turn it over to those of you in the audience. And I'm going to turn it back to Ashley. I know, Ashley, you've been asking folks to pop their questions in the chat, right? And as we go along, so I know you've already got some in there, but I'll just remind people to please add your questions here to the chat, and we're going to answer them as we go along. So Ashley, over to you. What are you hearing in the chat?
Yeah, I have a couple ones here and one I want to ask also. But one is around COVID. Has COVID and the pandemic world that we're living in made it easier or harder for founders to raise money?
I mean, I think it's a tale of two worlds. Sorry, I just am jumping in because I don't know if we're doing it informally or being called on, but I think for some people, it has become so much more efficient. You can stack meetings, you don't have to travel. Geography, the barriers in geography have broken down. I mean, look at Atlanta over the last year, Chicago, these places are just kind of booming in ways that they wouldn't have before. At the same time, we are seeing sort of a reversal in trends for underrepresented minorities, for women founders. And so I think there is, it is harder to create some of the momentum and, some of that FOMO in a non-digital world. Like it's very easy to say no to people when you haven't met them in person. And so I think, it's kind of creating this bifurcation for the people who already had the networks and the people who are trying to break in. And so, sort of an inconclusive answer, but it's really both, in my opinion.
Anyone else want to add on, or should I jump to the next question?
Well, I would say I'm not seeing a slowdown in funding due to COVID. In fact, I'm seeing that in the world that I'm in and the folks I'm talking to, we can get more done over Zoom than we ever thought we'd be able to do, right? I never thought I'd invest in a company where I didn't meet the founder in person, but I've done that in the last 18 months, right? But my productivity and efficiency and seeing more companies is so much higher because I'm not traveling to coffee meetings or to this and that. It's all happening sort of much more efficiently. And we're just seeing more deal flow and seeing more opportunity to invest and getting more comfortable with doing it in a virtual world. So that's my 2 cents. It's definitely not slowing down.
I would love to jump into just because I know we had a lot of people join after we did some notes. So just so everyone knows, our co-sponsor, we were going to do 2 breakout sessions, and our co-sponsor is supporting her child right now and had an issue with her child. So again, kind of going back to mental health and how you have to support yourself. I definitely have seen that. Also needing to take care of my daughter this week. But I wanted to let y'all know that Venture Atlanta, interestingly, we had the most applications ever by, female founders, by, underrepresented founders. We've selected the most female founders and underrepresented founders. We have a significant number of investors coming to Atlanta for our event in October. So I think as much as everyone's like, all right, I can just keep doing everything via Zoom, I think some of us also miss it being in person. So I just wanted to let everybody know that Venture Atlanta is open right now, but we are very, very close to being sold out of tickets in person, but there is still going to be a virtual model. But what's so exciting for us is that, we can have founders at Venture Atlanta meeting with investors and then hopping on their computers and meeting with other people virtually around the country. So there's so much, there's some good that's come out of COVID. I mean, I'm using that, lightly, but we've all had to adapt. And before we would have tried to figure out putting together an event and everyone would have gone to Atlanta and gotten in their cars, and now we can have 50 people online and have a good conversation. So I just wanted to pipe in for a second, but I'll shut back up.
No, that's great. Thank you. And that actually leads into the next question that was out there of what are all of you coming from the VC side, where are you going to find out what are the hot companies and the companies that you need to be investing in? Where do you go to look? So any of you feel free to jump in. Thank you.
It's probably just a matter of personal preference, but we get inbound and seek outbound in a lot of different ways. My partners and I will get on a rabbit hole about something that we're really excited about and a sector that we're really excited about, and then actively seek out companies in that space. A lot of it is referrals through our network. I watch a lot of these virtual pitch competitions in different sectors that I think are exciting, and we'll reach out to the entrepreneur if there's looks like that there's a fit. So all sorts of ways. And then a lot of it, I get a lot of inbound on LinkedIn and things like that, where folks seek us out and meet. We're able to meet virtually, which in that regard, COVID's been amazing because we're able to meet with people all over the country all day long. So it's been great.
I could jump in with the whole, I know I've been like the promoter of the ecosystem concept, but I actually think that for deal flow, that's kind of one of the most critical pieces, because that's how, we've been able to build relationships with kind of different accelerators, different academic institutions, different kind of women supporting, funds and founders and platforms. So I would say, again, the ecosystem is really where we found all of our deals. And I think that the broader and more global and, more aligned it is in terms of mission and values, the better the deals. And so that's been kind of how we've been looking for our deals.
Yeah. And I'm going to add on there too, coming from an SVB perspective, it is definitely network in your ecosystem. I mean, we have close relationships with the venture community, and we're constantly staying in communication and sharing hot new companies that we are seeing and having regular conversations of, between the venture world of like, hey, you need to see these companies. And we often are seeing them before a lot of you are. So it's a great tool for all of you.
Actually, I'll weigh in on this one too. I think back in 2013, when the JumpFund first got started, we were, I believe, the first fully female run, all GPs were females in the Southeast, focused on gender diverse companies. And when we opened our pipeline, we had like 200 applications in the first 6 months, right? It was just like, that we put the mission out there. We had 95% of our LPs were women. So we were women investing in women, and we got that word out there, and we were lucky to get, a lot of initial pipeline. And then after that, it was very much, I want to echo what Falon said, once we were seeing what we were seeing, we started looking at what were we not seeing? And then how could we, if there were some sectors we wanted to be engaged in, like we wanted to be in the ed tech sector, we wanted to look at that. We wanted to see more women in fintech, and where could we find that? So then we started doing some of our own homework, but we've also gotten some really great referrals from our LPs and from our companies we've already invested in. So again, that whole network building concept that we've been talking about here, where you as founders use your network to get introductions to us. When you're getting that much deal flow like we were getting in the early days, and we knew we were only going to make maybe 30 investments, we needed to cut through the noise and see how are we actually going to find some really great companies. So that network piece was helpful as a data point for us as we were looking at these applications.
Okay, I've got another question here. How are we doing on time here, Allison?
We're good. We still have about 30 minutes left, so we left plenty of time for the audience to weigh in.
Good. So let's talk about some of these early stage companies that, may be too early to go the venture capital route. And they maybe have raised their friends and family, but now they're looking for some angel investment. This has got to be like the number one question I get from companies. I would love your insight of how, again, it's probably going to come back to the network piece, but maybe 1 or 2 tips of like, how do they get in front of more angel investors, or where do they find them, or how do they get the attention of angel investors?
Yeah, so I can start on this one because there's a group I'm super passionate about. I happen to be a member of it. It's called the Angel Capital Association. And if you don't know the Angel Capital Association as a founder, you should look at it if you are looking for angels. They have a website that not only has education for you as a founder as you're thinking about raising money, but there's a whole section of it devoted to every angel group or significant angel investors across the US. And I think in Canada, it might even be in Canada too. And it organizes it by state. It gives you hyperlinks to their website. So if you truly are trying to go that angel route, I would take a look at Angel Capital Association, because most of the big, I think almost all the big angel groups and several significant solo angels are all part of that network, and their information is there for you to get access to it. And then you can start what I can't recall if it was Jackie or who it was that said to do your homework, right? Who are these groups? What do they invest in? Who's active? You can get all that information. It's out there of who's doing the investing.
And Kim, on that point, I think a lot of these angel groups list their members because it's like a promotional, whatever they want to show off who's behind the money. And so if I would actually recommend doing this from the very beginning, but usually these angel groups have like a lead or someone who's managing the group, and then they have all these angels. If you find an angel who is super relevant in your category, just go to them directly. Because they're probably, if they're interested in investing, they'll bring you to the group and everyone will pay extra attention to you if it's, one of the members bringing you in versus sort of like a cold entry through the investment group. Or, they might create their own sort of network around you with other folks that have expertise in the, in the industry or category that you're going on. So I think, Kim, that's a great resource to start big and then, whittle it down.
And to your point, Jackie, most of them also run office hours. So, and on their website, they list their office hours and they tell you how to sign up. And I've seen a number of companies get funded by going in through office hours and getting to know the folks that run that part of the deal flow process.
The other thing I tell our clients is look in the media, look at what the publications are saying of what companies exited in the last, let's call it 5 years, and find out who those founders are, because they likely have cash that they're investing back in the ecosystem. They may not be, they may be a pretty secretive angel investor, or they might be more widely publicly known as an angel investor, but that's another great way to start finding out who's putting money back into the ecosystem from an investment standpoint.
That's true. And I think a lot of funds are getting earlier and earlier. There are a lot of pre-seed funds out there, and a lot of seed funds, because deals are so hard to get into these days, are doing pre-seed deals. So that's a Google search you can do, and investors are investing nationally now as well. So I'd look up pre-seed investors.
Yeah, at Venture Atlanta, we actually feature pre-revenue companies up to growth stage companies raising, 10 to 15, $30 million. And the reason why we started the pre-revenue companies was really so that investors could get that first look. And a lot of times, companies will go, I talked to a lot of investors, but I didn't get any money. And I'm like, you're building relationships. That's what you need to do. You need to build those relationships. And some of these VCs will follow those companies for 5 years. I mean, it's about making those connections. And, we're incredibly proud of companies that have been a part of Venture Atlanta, like Cabbage, like Park Mobile, like Roadie, like Cloud Sherpa. Those companies all started with 2 people. I mean, Cabbage was on our stage in 2009 when it was, Rob Frohline, Catherine Petrella, and Mark Gorlin, and that was it. Like they had an idea. So, I see there's a lot of founders on here, and I think you guys, what are the questions you all have? What's challenging you right now? And, you've got 4 unbelievable investors, 5, with Kim and Ashley being a great resource. So, come up, put together some great questions from the founder perspective, which is why we put this together. So just wanted to cue that up.
I do have another founder question asking, in your opinion, how do you think men can support female founders? Or how do you ask for help from
Write checks and invest in them.
Yeah, I know. I'm not sure this is the right group to be answering what men should do, right? Thought I'd throw it out there though.
Yeah, I mean, honestly, when we first got into this with the JumpFund, we got asked if this was a philanthropic effort, if this was about, making, it's like, no, we're here to make money. And you make money when you invest in female founders and gender diverse leadership teams. The data is there and it is really clear. And the other thing I'll say, and before I get off my soapbox, is 80 to 90% of every buy decision in every household is made by a woman. And when you're looking at healthcare decisions, it goes up to like 95% of those decisions being made by women. And when you're living, if there's a man living by themselves, they typically have a woman in their lives they go consult with before they make that decision. And so if you're looking to invest in a company that doesn't have women in key roles, in leadership roles, that company is missing one of the main economic buyers of what their product or offering has to be about, right? And so it's just good business sense to invest in gender diverse teams and female founders. They're better job creators. They make more money for you as an investor, and we're in it not just because it's the right thing to do, but because it's the lucrative thing to do.
So I have a funny story. So yesterday we selected several companies, and one of the companies is female founder, and she called me and she said, I'm so upset I can't participate in Venture Atlanta. And I was like, why? She goes, well, because my due date is that day. So she's literally having a baby on, at Venture Atlanta. But what was so interesting is, she was so excited that she got selected for Venture Atlanta. She was like, this is such an incredible opportunity. She said, is it okay for my co-founder to present? And her co-founder, is a male. And I was like, yeah, but I will tell you guys that women rock our stage. Like they do an amazing job. I mean, Jackie, I know it's been years, and Jackie has money in RoadSync, and Robin Gregg is an incredible CEO who is just, I adore. And, they tend to really, just do an incredible job, and they do an incredible job because they take the time. They sit there and look at everything and make sure their I's are dotted and their T's are crossed. And it's just incredible. But, Cameron and I sat on the phone and I was like, all right. I said, Jay can pitch. I said, but she said, how should we weave it in? I don't want people to think that I'm neglecting my company. And I said, don't worry, if Jay's on stage, he'll just say, well, Cameron's in labor right now. That's why she's not here. I said, everyone will get a little chuckle and, you'll be fine. But I was like, I said, so is this your first child? And she said, yeah. I said, well, both mine came early. So if both of them come early, I said, you'll have Jay on stage. I said, and you could be sitting on the virtual platform meeting with investors, while you have the child, your baby sleeping. But it was just so funny. But she was so excited about the opportunity and so passionate about her company that she was literally trying to figure out how to have a baby in the middle of it. And it was just, but that's what women do, my co-sponsor was like, oh my God, here's this great opportunity I had to be in front of all of you, but I got to take care of my child, and this one was, and I got to go have a baby. And so everyone always has their challenges, but I will tell y'all that there is such great support systems out here. I mean, we put together, hey, what can we do to support women? And, Sylvia and Jackie and Falon and Arian and Kim just jumped in to help. And it was just, so wonderful. And obviously having SVB and Twin Oaks Recruiting as our sponsors. I mean, I'll tell y'all that SVB has been a partner of Venture Atlanta for 15 years. So they go way back. They're an amazing company and certainly a great partner for all of you.
Thank you, Allison. we've got time for more questions. Does anyone want to jump in? Will they be allowed to just unmute and speak?
Yeah, you can unmute. I do see a question here, Ashley, that came in kind of early about as an educator and an advocate of bridging the gap with the youth, I want to know if there are companies out here who will fund a minority company who is teaching young scholars business skills, how to understand stocks and trades, and the trucking industry. Okay, so very well rounded there. So maybe we could throw that one open to our investors and see if they know of any investors out there focused on that space.
I'd love to talk. I think new models of whether it's trade schools, upskilling, reskilling, it's going to be a very important part of our economy over the next couple and longer years. So I've invested in a company that had a trade school component in reskilling for. I actually alluded to this manufacturing one, but I think there will be a lot out there. I think the challenge here is the business model has to be really, really interesting for a venture scale business. And that's the hurdle a lot of folks come across in these types of models. But yeah, there are folks out there. And then there are also funds that are more specifically focused on education, economic development. Again, still venture funds, but have a tighter focus there. And I have a list of a few of those. If I think that Chantal said that, I'm happy to talk after the call.
I was just going to chime in really quick and just say that sounds like a social enterprise. And so I know there's a lot of kind of different support systems out there for social enterprises, whether it's accelerators and kind of a mixture of philanthropic support along with just capital support as well. So happy to chat as well.
Ashley, I think there was another question.
One more from Julie. I'm a founder of a tech software company, and I also own another business that's successful. Do investors expect you to have just one business?
This is such a great question. I'll give my perspective and then let the other ladies weigh in. It depends on what stage your company is in. And, because we know in the early days, you may be working on a couple of different things, but in my opinion, as you take on outside investor money at a certain stage, we expect you've got enough money to where you're focused on the thing we invested in you to do and deliver. So in our world in JumpFund, we were supportive of it up to a certain inflection point in your company, and then you had to be all in if you wanted us to be all in as investors. But happy to hear what my fellow VCs on this panel think.
I think that's probably right. I have invested in a founder who was running more than one business. They were very related to each other. So I think your circumstances are important as well. It can be done, but I agree the later the company gets, the busier you'll get. And when you're taking on outside capital, it's probably pretty important that you focus on your company. But it's also very important that you're open and honest about this upfront when you're meeting with investors.
Feel free to comment, Julie. You guys seriously can unmute yourself. We can make this more discussion. Everyone doesn't have to stay on mute.
Yeah, so thank you very much for getting back to me. Yeah, and my two businesses are very much related. I actually created a software company to help me run my existing business and so that's why I was kind of asking. I mean, right now, I'm actually open to bringing in another CEO to run the software business. So do investors work with you if you would want to hire a CEO for your tech company?
Sure. I mean, I think we know that that you move from founder to CEO and in different ways, right? So you have an idea and you're going to start a company. You may not always be the right person to run that company as the CEO. So for sure, we understand that you may have started the idea, but you've got somebody else running it. In fact, at the JumpFund in our 30 companies, we've got several where the CEO is not the person we originally invested in. They moved to take a different role in the company based on the changing skills and needs of that company. As it grew and evolved, it needed something different. So, Sylvia, Jackie, Falon, feel free to chime in as well.
Yeah, I think that's more than fine, and it happens all the time. But we're investing in the CEO. So I think that if that's the path that you want to take, identifying that person before you take on outside capital will be really important. I think it'd be tough to raise money with the story that we don't know who the CEO is going to be. I think that's going to make it a lot harder for you.
Okay, thank you.
I was just going to say, as Kim said, really it depends on the stage of the company. I think the earlier the company is, there's also that thing that you invest in the jockey and not the horse. And so then it becomes even more critical about who you're actually investing in, especially if the company is early and pre-revenue. I think then it becomes even more critical. So just kind of wanted to point that out too.
Great.
There are also alternative, I know I'm kind of piling on to this answer, but assuming there is, more than one customer, or you get it to a handful of customers, there are a lot of alternative sources of capital for companies like these, either search funds, or if you even go online and say like, I want to sell part of my business or whatever, there are marketplaces that there's like such high demand for software and recurring revenue businesses that you don't necessarily have to go the VC route to, get some liquidity, get some help scaling, all of that kind of stuff. There's a lot of demand out there.
So Jackie, that actually is a great segue into the next question. It was, how do you know when you're ready to seek venture capital? What are some of the key metrics that a founder needs to have in place?
So we invest at the seed stage, and that has sort of changed over time. Like I think Falon, you mentioned that pre-seed is going earlier, seed is going earlier. For us, we define it more from a standpoint of how much companies are raising than maybe where they are in the life cycle, just because of the way our fund works, and the market has changed so much in the last 3 years that we've been investing out of the current fund. I would say that, for us to be interested in a company, we're typically not getting involved pre-product because we want to see something out there and some sort of engagement. That does not have to be revenue, but it has to be line of sight to having, what we call product market fit. So, a clear understanding that customers are demanding the thing that you are building. So that might be, a half, if you're selling to sort of small, medium businesses, maybe a half a dozen companies that are using, hundreds of users. If it's, sort of a paid consumer product. If it's enterprise, maybe 1 or 2 pilots. But I would expect to show like some indication of product out there being interest in it. But it doesn't have to be at the point where you're, making $500,000 in revenue a year or whatnot. I'm sure this is different for every fund, by the way, which is why fundraising is so fun.
Totally.
And it's also different by industry too, right, Jackie?
Yeah.
I mean, what you're looking for. I want to take a bit of a different tact on the question as well, which is deciding to take on outside money, right? Because that in and of itself is a huge decision point, even beyond the great advice Jackie's given you already about what we might be looking for in terms of MVP or customer traction, or where do we feel you are in product market fit, is the decision of, am I going to go it alone or not? So Allison and I were talking earlier today about MailChimp, right? And the big news about MailChimp. And, Allison was reminding me that they never took on outside capital, right? They bootstrapped this thing all the way to a $12 billion exit, right? That is not the norm by any means. And I hope not anybody's case study for exactly what they want to do, because that's such an anomaly, and kudos to them. But you're going to come to this inflection point where you're going to have to decide, can I continue to do this without outside money? My personal opinion, I say this as a VC, the best way to fund your business is a paying customer. And there is nothing that can replace paying customers to fund your business. But you get to the point where you cannot expand and scale and grow and do the things you need to do operationally to take your company to that next level. That's when I might need to bring on outside investors, and I need to get a quicker infusion of cash. And I think you should look at all of this. I teach a class called Funding 101. And one of the things we talk about are the risks the trade-offs, the decision-making points when you decide to take on outside money. And just, you've got to be very clear. And I think somebody even said this earlier about what are the things you're going to accomplish with that money? And is it worth it to take on that outside money and give up ownership in my company versus just let me go get some paid pilots and let me go get some other paying customers who are going to help me grow and scale the way I need to. So that's some of the things that are on my mind if I'm a founder and I'm thinking about outside money.
Thank you, Kim. That was great. Another question, somewhat related. How do you divide equity among founders, co-founders? We probably can add on to that when it comes to taking on equity and employees.
I think that's a personal preference. Just make sure you're
Get a good
vesting.
lawyer.
Yeah, just make sure you're vesting everyone, even if they're your best friend. Things happen. You know, this isn't for everyone, and you don't want to be 3 months in with someone who's fully vested and then need to find someone else to fill their spot.
Yeah, that's a great point about vesting schedules, Falon, and just making sure that you're setting the right vesting, but also understanding the difference between a co-founder and an early stage executive, right? Like, your co-founder is truly the person that's in it with you in a real partnership versus somebody that you bring on after you've had the idea, you've done the hard work, and then you bring on an early stage executive. And sometimes we're tempted to just give them the co-founder title and give them equity. And again, I think this goes back to some of the stuff about undervaluing ourselves and making sure that we are, saying, hey, I came up with this idea. I founded this company, and then I brought some folks in later. So I think you have to look at that as well. But there are some benchmarks out there that you can look at, like depending on the role people play. I think Y Combinator has some good advice on that. I don't know, Sylvia or Jackie, anything else you want to add on that?
I actually just posted an article on this on LinkedIn this week on how to divvy it up and how to attract talent. And there's some good information in there too.
As a non-practicing lawyer, I would say speak to your lawyer. And I know that there's definitely a shortage of good kind of affordable lawyers for startups. But I think that, when it comes to equity and the split there, it does get complex. The one thing I do follow is put everything in writing and get a lot of advice. And I know, Kim, you did an excellent breakdown of even the decision point of whether or not to take outside capital. And I think when it comes to equity, splitting equity, it's just as thoughtful of a process that really needs to be thought of with kind of long-term projections in mind.
And I think we have another question from Beryl Baldwin.
Yep.
You want to take it, Ashley?
Sure. We're talking about the good old imposter syndrome, which we all struggle with at times, right? So the question is, I'm a recent college grad and founder of a femtech CPG company. I'm having a lot of trouble getting out of my own way and getting past the imposter syndrome when it comes to reaching out to investors. Is my lack of experience as unattractive as it feels?
I can say as someone that has struggled a lot with imposter syndrome, that I would say that I loved what Falon was saying earlier about being authentic. And I think that when you know your why, conviction can go a long way. Conviction and knowing yourself and being authentic to that. Of course, that doesn't necessarily replace experience. There does have to be, the research, the metrics, there has to be some solid hustle and work that goes into it beyond just the conviction. But I would say, especially as a recent grad, don't let your lack of experience take away from your why or your conviction. And one thing that I would encourage you with is that all of us struggle with imposter syndrome. Like, I'm a 15-year plus social justice lawyer that moved into VC, and I thought it was a massive pivot, and I still struggle with it. And I think it's kind of almost like a daily choice to conquer it. And this kind of goes back again to support systems and why it's so important to have people around you that believe in you, that are giving you those honest words of advice. And, above all, like I said, empower people, empower others. So you've got to make sure that you're empowering yourself too. So not sure if that's practical or not, but we all struggle with imposter syndrome, and maybe what you can do to make up for the lack of experience is being super proactive in terms of building that ecosystem and surrounding yourself with people that can help you gain that experience.
Yeah, Sylvia, I'm going to jump into, I do a lot of Bootcamp 101 on fundraising also here in Austin. And one of the things, this comes up a lot, and one of the things that I am always telling founders is focus on the numbers. Like if you have data that you can speak to, like that speaks volumes and takes away from any inexperience you may have. So it's back to like making sure that your numbers make sense and that you have the right, support when it comes to like your projections and your TAM and where you can take this company is really it's gonna speak for itself and take over some of that inexperience that you may have.
I'm going to take a slightly different perspective on this. In part of it is, you don't know what you don't know. And that is the hard part about lack of experience. And that is the hard part about being a first-time founder. It is the hard part about being a first-time manager, first-time leader. And so the more you can surround yourself with people who have been there and done that, the better off you are. Now, from in investing, or the way that I look at this through a venture capital lens is, there's sort of three, I'm oversimplifying in a big way, three things you need. You need access to capital, you need, customers, and then you need talent to help you scale the business. And those are the things that you have to de-risk as soon as possible. So can you recruit people? If you can recruit really talented people around you, you all of a sudden kind of take care of the other two stools. And it is also a validator of, you can operate. If you can convince someone who's great to come to your company, you can probably do the same for channel partners or retailers or, whatever else. And so I would say the more you can de-risk some of those elements by, not being afraid of experienced people, but bringing them onto your side, I think the better. Because that's really the scary part, I would say, for an undergrad coming out, starting a company is just can you scale it, and can you get the people around you to really help it grow as well?
Yeah, and the thing I'll add on what Jackie's saying about surround yourself with good people, don't forget about your board of advisors. And because I know in the beginning, when you may not have the money to bring on the talent, I mean, Jackie's absolutely right about hiring is one of the most critical things you'll do as a founder. So prior to that step, when it's just you and maybe you and a fractional CTO or a couple of contractors, surround yourself with a board of advisors that are willing to allow you to put them in your deck, so that when you're talking to us as investors, you're talking about how you brought on these advisors to basically complement your skills and fill some of your gaps, right? So we also do look at that board of advisors very closely, because we know generally at these early stage companies, those advisors are super influential on how you're making decisions and how you're thinking about going forward. So rely on that board of advisors as well to help you with that credibility and authenticity around how you're building out the right set of knowledge that's going to be needed to take this company forward.
Do we have time for one more? Yeah.
Yeah, it looks like we have one more from Matali.
Yes, and so it's kind of a specific question. So let's try a little bit. She keeps hearing from investors that they won't be able to do that well because they have a competitor that went public a couple of years ago. And it's in the fashion tech industry, and she's a female founder of color. And she's wondering if that's just a reason for rejection, or if they have something to do with me being a female founder. She's just trying to understand why, if I'm understanding the question right, why having a competitor that went public is going to be a deterrent to her success.
Well, I mean, it's hard to know, second guess something we don't know all the details of, right. But we do know, like I know as an investor, we do look at how others in the same category have done and where some of their challenges are and how they're overcoming it. We also look at our own personal experience. Our early days with JumpFund, we did a couple of food and beverage companies We invested in them and they didn't do very well. And we realized very quickly we didn't have a lot of expertise in that space. It was a very hard category. And based on our experiences with these first couple, we were not going to make any further investments in that category, right? So that's one reason why we do tend to look at how others are doing, or we look at our own portfolio and how it's doing. I don't know about this specific example about, you would think if they went public a couple of years ago, if it was a successful effort, it would tell you that it's a good space, but I don't know if the others have a thought about that particular point.
So I'll give some insight into like the rejection process, which is if I am turning down an investment after a first or second call, I will try to be as genuine as possible on my reasons for not investing. If there is some subtext or something that is sensitive, I might not include that. Meaning if it's the market is crazy and that is a simple answer, it is certainly a true answer. It might not be the full answer. And so I don't want to suppose what people are holding back or not, but so you have the context. If people are scared about the public competitor, they are certainly scared about the public competitor. There might be other reasons for that, like it's a winner take all market. Cost of acquisition is really high, and maybe they saw that in the filing document, so they're scared of that. But this is sort of where I go back to like find people, whether it's talking to a VC that you're not pitching, you're just asking for feedback, and say like, what are all of the reasons I might be getting some feedback, and you want those people to tease out like where is it the company, where is it me, is it my story, where are these things not resonating, because it sucks. I mean, it sucks to second guess why you're getting turned down about it being you versus something that you can fix or you can address. And so anyway, I would seek out people that are don't have an angle, they're not angling for investment or not investment, to help you suss out where's the story not resonating.
All right, well, we've got about a minute left, Allison. I think might be a good time to wrap it up for today.
Yeah, I think this was great. I mean, we ended up having a lot of people online. Some people have dropped off, but what's so interesting is the last thing that someone just said is, thank you for the words of wisdom. What are some of the platforms to continue such conversations? And I think that's really where the struggle is right now, is like, we're sitting here going, there's something done here and there, but I will tell you that Venture Atlanta, we're really looking at what more can we do to support women. I know Launchpad 2X is a program here in town that does a lot, and there are several things. There's funds like JumpFund, but I think we as the females breed need to do a better job supporting fellow women. And this was wonderful. Thank you all so much for your time. And I know we recorded this, which is wonderful. So I know there were some people that missed it. So we'll be forwarding this on to anyone that missed it, or to everyone as a copy. And we'll also post this on our website and probably take some snippets of this. So thank you all so much. I hope to see everybody at Venture Atlanta, October 20th and 21st.